clearly it's going to be a very heavy week coming into this week. So let's flesh all of that further. Joining me now via Zoom, we've got Manny Ocampo, Senior Managing Director at Investment and Capital Corporation of the Philippines, or ICCP. Good morning, Manny. It's been such a long time. Good to talk to you again today.
Good morning, Regina. Yes, a long time indeed.
A long time, and so much has happened in between. Let's kick off with the news over the weekend with the major escalation between Israel and Iran. Unsurprisingly, what we're seeing this morning is oil prices jumping. In fact, they jumped more over the weekend. It's since paired gains. Take a look at, we've got futures for Brent crude and West Texas Intermediate rising as when I last checked, up by at least 1% each. Like I said, they jumped more over during Sunday, but have since paired gains. Now there are calls for oil to hit maybe $90, maybe $95 a barrel. How is this going to impact the Philippines and its inflation projections? Here we're looking at 75, just a little over 75 for Brent crude, and that should be $74 for West Texas Intermediate. Sorry for that typo, but that should be 74. But go ahead, Manny.
Yes. Well, this will definitely impact inflation, especially if we don't see it sustained, Regina. And I guess that will also impact BSP's own actions on rate cuts, anticipating maybe inflationary pressures beyond I'd say beyond the first half. Beyond the first half.
And that's what's concerning about this, I suppose, because it doesn't seem like there's a solution or a detente in sight. You just heard U.S. President Donald Trump saying that sometimes they need to, quote unquote, fight it out, although he is hopeful for a deal, of course, but at this point in time, it doesn't seem like either side is ready to back down. How concerning is it? When you say that it should eat into the inflation projections, how concerned are you for your clients' portfolios?
Well, first, I think again, oil hitting 90 and all that, we'll have to see. But we think there may be some other supply coming out on oil if things do pick up. Other suppliers will provide oil at some point in time at the higher prices. So the jump in oil prices will go up definitely, but I don't think it will go up in the leaps and bounds that we may see. Now, if the conflict between Israel and Iran become protracted and maybe other players join in, well, that's a different ballgame altogether.
In light of that, do you think, so at this point, most economists and analysts are expecting that the BSP will cut rates when they meet this week. In light of everything that's happened in the last 4 or 5 days, do you think they should carry on or change course at this point?
I think BSP has room to do the rate cut this June. Now, beyond June, that's something else. I think BSP is going to try address, lower rates to, shall we say, provide a base to stimulate economic activity. We've lagged behind the growth, GDP growth numbers in the first quarter with the rate cut. The hope there is that it provides a base now for government and private sector to pick up on economic activity, maybe in the second half of the year. So the question there is August. What will the next monetary board meeting in August? Maybe we'll see what happens.
You're right. There's a lot of variables that's hard to predict at this point. And you know what else is coming up in July is, of course, the impeachment trial of the Vice President of the Philippines, the first such impeachment in the country's history. One of the senators in their interpellation last week already mentioned this, which is that investors are, I think it was Senator Robin Padilla, in fact, brought it up that investors are already looking at this with a bit of trepidation because, of course, that would mean that the Senate will be tied up whilst this is going on. What is your view on this? How are the markets looking at this?
Sure. The political noise is always something worrisome in the sense that it provides uncertainty. But I think business will continue to move forward, regardless of how the impeachment proceedings move forward. I think maybe a bigger thing to watch out during these proceedings would be mass actions. Will people go out to the streets? Maybe that's something we'd be a little bit more worried about if it comes to that. But if things remain quiet, I think it. Well, I wouldn't say a non-event, but the impact of the impeachment trials may be a lot muted than initially expected.
Manny, flesh out that thought for us. Why is it more concerning pag nagkaroon ng mass action? Why would it take why would it hit the economy more than all this political noise?
But, okay, when people go out to the streets, that's when maybe foreign investors starts worrying because that's something maybe there people will get worried about that, especially foreign investors. Now that the people are going out to the streets, it creates that kind of uncertainty, which in other markets that is not present. So again, choice whether Philippine do I go with Philippines where there's growing unrest, growing uncertainty, or do I go to somewhere else where maybe things are a lot more quiet or stable?
Especially at a time like this, no, when there are hot wars going on in at least two places in the world, and also the prospect for global conflict is on the rise. So in this kind of scenario, how do your investors hedge? I mean, outside of, I guess most of the investors are running for gold, which is why we're seeing it shoot up to record highs. But how else would you hedge in an environment like this?
If well, people will probably shift to, they'll find a balance between equities and fixed income securities, and that's what we've always suggested all this time. The equity markets may, provide too much volatility at this point, so we'll wait it out and see. So, in the fixed income market, with the anticipated rate cut, again, that's another action that we want to take a look at, a new base, etc. If you're invested in most of the preferred shares and REITs listed right now, they may see some kind of uptick with the rate cut. Given that yield expectations or yield requirements will be a lot lower this time around with the rate cuts. So, we continue to tell people to find a balance on fixed income. REITs maybe provide the a bridge between equities and fixed income in a certain sense because they will probably benefit from the rate scenario, Regine.
Break down that in point about excuse me. Break down that point about fixed income for me. What's looking good out there? Are T bills, Philippine T bills, and notes still a good idea? And also the U.S. Is it still a good idea? Is it still the safest fixed income out there?
Well, the U.S. Really only because there's nobody else, and people will still benchmark against that one. On the Philippine side, there are quite a few private sector issues that have come out lately. Bonds, preferred shares that we like, and provide some kind of a decent premium over Philippine, the treasury notes or treasury bonds. So we look at that very closely. Some privates are pretty much comparable already as far as risk orientation is concerned.
With the privates, possible to give me some names, Manny? I mean, which private fixed income products are looking good out there? And also related to that, does that mean that you are then uh, bullish on their earnings prospect, even amidst the whole tariff issue?
Sure. BPI recently came out with their CNAG bonds, and that should be, I think, listed already. Ayala Corp will be coming out with their own preferred shares, and a few others. No?
And the global trade war, the tariff possibly kicking in soon. If not, I think they have kicked in already, right? Because we were
Yeah.
just given a 90-day reprieve, but 17% is what we're looking at. So the tariffs shouldn't eat into any of these corporates' growth prospects.
No, I think people will adapt to those. I mean, Philippines in particular, we're maybe not as going to be badly hit on the tariffs compared to other countries trading with the US.
Okay. All right. Very good on that point. On a positive note, we will leave the conversation. Thank you so much for your time and your insights this morning. Manny Ocampo, Senior Managing Director at Investment and Capital Corporation of the Philippines, or ICCP. I hope to talk to you again soon.